Secret, the channel for learning about trading and investing. Welcome to the daily stock market analysis show, where we look at what happened in the market during the day and then try to learn something from it and then plan for a better trade for the next day. And this is analysis for December 22nd, Thursday, and expiry day tomorrow, 2022. So what kind of day we had was very bearish, bear trap and engulfing pattern. Right, bears have taken over. Let's look at the charts and see what exactly are we talking about. Daily charts for the Nifty. Let's first see the weekly charts just for reference before we begin. Right, this is where we are. Alright, I shifted the trend line to the top to catch 3-4 candles, so that becomes a resistance there. On the Nifty and Banknifty also I moved up, so it looks like something like this. So we had the resistance earlier someplace down and then trade drop out of that. Let's get into the daily charts. We have detailed weekly analysis on the Sunday, but let's look at the daily charts and look at this candle. Let's take out all the indicators. Plain chart. Look at this candle. This is the most bullish in the recent times. There's another one on 15th December, and after 3 days break another one comes even bigger than that. It's actually it's actually almost 2%, 1.7% of downfall from the top single day, and this is 2.9% from the top. Translate to 1,250 points from a drop from the top. So that's kind of big selling that happened today. I'm still looking for the selling figure. It does not come out how much did Fyers sell or not, but we'll see that later. And you can see that it's at a very good support, so change in priority is possible. Banknifty also, it's at a previous resistance which could act as support and bounce up. There is no confirmation, but there is a possibility. Right, there is a probability of that happening is all we can show, but it is at a support zone. Also, if you have another look here, it is at a support zone. It's a 50 DEMA, exponential moving average, daily exponential moving average, and that's where the support is taken on the Nifty on the left side and Banknifty on the daily. It is given up the 20 exponential moving average support that it had. So those are changes. Bollinger Bands have confirmed the sideways movement, which a bearish bias on both indices because it's below the moving average 20 DEMA median of the Bollinger Bands. So that is all confirming bearishness. After we lost today, total is 186 points down. It's 1% down, 1.7%, almost double loss in the Banknifty. So Banknifty pulled on the market today, 741 points lost. Bearish engulfing, plus it's a bull trap. Right, bulls were trapped. It initially gapped up and trapped the bulls who went long and then went engulfing the entire, pulling the entire market down on both indices. Right, bearish engulfing bear trap day. That's what it is, candlestick terms. And intraday, if you see, it was initially a gap up and then it was trending down. Right, both indices had the same, and Nifty has taken the support. We have seen change priority possibilities. So we'll talk about all that. Let's look at quickly the levels. 18,262 upside first, 18,442, 18,530, 18,103 downside, and then 18,000 reasons. 18,103 is going to be good support. It's a Fibonacci 38 retracement. It's a gap support. It's a previous swing low. Right, 18,000 is a rounding number of that. That's what. Then 8950 zones, 7950 zones. After that, you have supports. Upside 262 previous resistance, 442 previous resistance, and then 530 previous resistance, then 678 you have resistance like that. So resistance upside, after 42 740 first, then 42 960, then 43. So all resistance in the upside. Right, then 42 364, 42 200, 42,000. These are all supports on the downside. Right, it's a mixture of previous resistance and rounding numbers. Let's take out a view versus support. See, we are talking about this. So we also have a head and shoulder pattern. Neckline of which is breached and it is close below that. Right? But as I said previously, Head and shoulder pattern is not that much relevant on daily charts. It's more relevant on the weekly or the monthly charts, right? But the target for that head and shoulder is the height of that head. That much downfall can be expected, is what they say, practically speaking. So this is the zone where the major support is the gap support. It's a previous swing low point, right? Higher low, higher high. That formation is what that we have to look out. So wherever the previous swing highs was broken, so that will be the zone. So 18,000 breaking that will be crucial. And similarly 42,000 breaking also is crucial. Alright, we'll keep a close look on those. Bollinger Band study, we have seen its clear consolidation, which bearish bias. Momentum has slipped, definitely. Momentum has slipped into the bearish zones on both the indices, but still not in the bearish zones, it's in the sideways zones. Both, no? So sideways momentum on the short term. Bearish DMI negative zones on the ADX trend indicator for the Nifty as well as Banknifty. It was already that yesterday, but today it is even more confirmed. More strength has come in the trend indicator ADX, and VIX has spiked up 13%. That's now 15.58. So which was the long regime, now it has spiked back, right? And everything, the 20 levels are all looking very, very close. So it is rumored that today's VIX spike could be because of the Chinese COVID fear that has got. If that is the case, then we have to be really cautious. Markets could do all the corrections that it was not doing till now, and easily take away also. If you are having long-term investments, you have to deploy your option strategies to counter that and get render ligam to banners and all that, right? Or else get out at 200 DMA breach of any major investments. Until then, hang on or play the option strategies like covered calls and cash secured puts and all that, and then keep averaging or getting rental income and survive this crash, because every crash it has to recover that turn. So COVID crash 1 in 2020, same thing happened. Market went down like anything and then immediately shot up double of that, right? So as an investor, you don't need to worry. As a derivatives or options trader, you don't need to worry because you can play both sides. Only thing is, you should, if you're non-directional, you have to be ready to do adjustments very frequently. Right? And if VIX is beyond 25, just stay out of the options trading, because all kinds of Greeks comes into play and then kick you out. Right. So that's it. The trend, momentum, bands, price action all negative. Futures saw a short build up, negative again. Look at the options just before an expiry tomorrow. The levels that the option riders has put is 18,000. So they're expecting that the 18,000 kind won't happen. And the highest call rating is in at 18,500. 42,000 seems to be the support zone for the option riders, and 43,500 is where the highest call rating is for the December 22nd expiry that's happening tomorrow. Put call ratio is in the bearish zones again. 0.4844 is bearish. Open interest bearish, along with the momentum trend, VIX spike and Bollinger Bands and support zones, everything negative. But it's still at the support zone. You have the moving average support bounce, support of 50 moving average support is there. Weekly supports are there. Momentum is still not bearish. CIP bounce possibility is there. A lot of supports are there. So until the week is closed, don't take negative or short calls until you get a confirmation of the weekly candle, because week has still Friday, it has to trade. That's when you use a clear picture. So it is IT and pharma budget. So these are the defensive stocks. Sometimes FNC also comes into play. That didn't happen today, but IT pharma shot up 2.4% and then IT 0.5% up. Others are all red. Metal 2.3%, 1.4% auto, FMCG 0.9%, reality 1.6% down, all red. So none of the sectors in the bullish on the short term. order on the sideways, except reality which has gone into the first sector to the bearish zones after the pharma has climbed back to the sideways zones. Heavyweights across downfall except for TCS and NFI, which is managed to climb, show some green. Except that 1 to 2% of downfall across all the heavyweights, HDFC, Bank, Lands, everywhere we have 1 to 3% up to of downfall bearishness that is seen. And FIDI selling data has not come in yet. People will be eager to see if the FI is sold or DI is sold or retail is sold or all of them sold. What's the picture? We'll check with the definitely it's be selling that has happened from the FIs most likely. And let's move ahead. So institutional participation might have also gone in the bearish side. Crude oil is spiking back. It's to reach 78 from 73, 72 kind of levels now. So it's in the sideways momentum. It is not. So it's in the bullish momentum, and we have trouble again back above 90, 100. We have trouble again along with the dollar spikes. So dollar has kind of it's a bearish momentum daily. It's meaning 105. It's not climbing up. It's consolidating basically, but the rupee has not improved. It's still at 82.6, and the USD INR is flat, and it's rising also, which is a concern. Gold is spiking as usual. When you have crisis, gold spikes up, and that's what is happening. It's a hedging instrument, and it is having bullish momentum as of now in the short term. Remember, there is a cup and handle plateau. We tried to break out, make an all-time high multiple times last year, but it didn't happen. Probably this is the time for gold to perform, and if you're hedging, this may be the time to invest in that so that you get benefits of. If in case it spikes up to balance your losses in the quality investments, one way of hedging among the many other ways. Singapore Exchange is flat as of now, using that is also kind of flat as of now. Just look at the Dow Jones futures holding and get a picture on where we are. So it's a descending hedge, and yesterday, last week basically, there was some spike from that support zone, so trying to hang on. So let's keep a close watch on this. What happens? Because all the indices, Nasdaq, S&P 500, Dow, all are already descending wedge downward. So is this going to be a reversal? And if the reversal is going to be intense and severe, then we have trouble. So this market is on the reversal mode. Small green was seen on last day, which gives some hope. But that's just in the Dow Jones, and the futures as of now showing some green. So keep a close watch in the pre-market tomorrow after the trading is done with the day. That's when it makes sense. But it's in the sideways zone as of now. Major events is tomorrow there is a jobless claims data that is coming. That may create some spikes if it's bad or good, bad or very bad or very good. Whatever spikes can come in. Volatility may come in. Basically these were picks for them last day. I don't have any two stock picks for tomorrow on the short side. One is IR. CTC, that's a railway catering, and Voltas, both are short calls. Voltas is having a head and shoulder breakdown plus rectangle pattern breakdown. So short swing trades towards the support at 721 could be possible. Normally is bearish, trend is bearish, trend is closed down on the weekly. The entry has to be made on the shorter time frame, daily, and tight stop loss with this neckline support of the head and shoulder has to be a respected time. 923.24, that levels is where the stop loss will be, but that will give short swing trades within a week time frames. IRCTC. I always get confused with this. Yeah, okay. It's having inverted head and shoulder rounding pattern basically. Head and shoulder also possibility was there, which is negated now, and price is breaking down, and we have momentum and the trend indicator showing bearishness on the weekly time frames as well, right? With triangle is rising, so probably related to the COVID train catering services may not do well, so that maybe they fear. So two short calls, Indian Railway, tour catering company, and Voltas. more than the short term. Now let's just quickly see if the data is coming. It is still not coming. What happened today? The information is still not coming. I'll probably check my Twitter. I will retweet it whenever it comes in from the exchange. Just to wrap up, a bearish day for sure. A bull trap day, a crackdown day. And that's all it is. No, 1% down on index. Banknifty lost nearly 2%, 1.7% down. So clearly engulfing bearish patterns are clearly bearish. There's no doubt about it. There is conditional bearish that is going to come for sure. But tomorrow it may not happen because it's an expiry day. Plus, after big falls, some attempt that can bounce or what we call some attempt to consolidate may happen for 1 or 2 days, and then again it may crash. But engulfing pattern, bearish engulfing patterns are powerful. Right? So that is something you have to keep in mind. So that's price patterns having bear traps and engulfing. One reason for me to go have a view of my bearishness for the next day. Right. And it's not sideways. I'm having a view of mild bearishness, right? Not moderate bearishness for at least for tomorrow, but moderate bearishness for the upcoming days is what I have. But tomorrow is an expiry. So COVID news flows. Computer market is again the Drawdowns is falling and reversing. You have the weekly expiry volatility. The weeks are short up 13% in a single day and short up greater than 15. These are all the reasons why I think that 19,000 is not going to be an easy, at least for a short period of time. Some more pullbacks may be expected. Market may not crash, it may pull back, consolidate, pull back. Gold demand still has a bearish bias, but it does not expand on the downside. So if that happens, it should be okay. Right. So 18,000 is something to closely watch. If you're going to break that, another 200 tomorrow or two after. Basically, the weekly candle is what we have to watch in the to understand. So let us be patient to wait for still Friday closing. What happens? Right? COVID may just be a panic. It may die down immediately and recover all that it just lost. So whoever is lost, whoever is sold, might become turned back to be big buyers even. Creating a short covering and all that. If the news is not true or rare feedback comes in and market might digest the news, it may be a spike. So you don't have to panic. You just have to protect your investments, long-term investments. As a derivative player, you can trade safe as long as it's less than 20-25 weeks. You can play safe with no direction also, as long as you know how to adjust and you know how to read the support and resistance levels. So you can do that. But above 620, if it spikes up another 5 points in the fix, stay out of the trade until things cool off. Right? As of now, I don't think there may be happening. This may be a news flow that may turn out to be opposite next day, and things should be all right. That's what you hope for. Productive capital with different strategies. You can use hedging instruments like gold. You can have diversified investments with defensive stocks and dividend stocks and things like that. You can have option strategies like cash secured puts and covered calls and all that to get rental incomes, and then average your portions and all that. You can do the different ways of protecting your investments, long-term investments, which you don't want to just simply get out of a panic, fear. Because it's going to be, if the crash is going to be big, it's going to be, the recovery is going to be even double the speed as we've seen in the COVID times, right? That's what happens. So only a slow falling is what you have to be afraid of. It is fast and quick crash, it should be fast and quick up move also. So you've already seen that in the 2020s and before as well. Right? So stay safe, protect your capital, have stop losses tight, and have hedge positions only in options. Above weeks 20, stay out. Right? And protect your investments with hedging strategies and options especially, and protect your cash using options. Protect your cash instruments, right? The equity instruments that you invest with long term with your options. Option strategy is different, right? Play safe and protect your capital, and then stay calm. All right, and once it is over, you always get the trade days back. So you don't have to trade every single day. That's my view. Mild bearishness is there still, at least for tomorrow, before I decide whether it has to be made in moderate bearish or not. But as of now, it's some pullback that is expected since the market has gone too much high. So if this analysis of the market has helped in some way, then consider hitting the like button, share to your friends and colleagues. It helps us to keep motivated in doing this every day. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.